Hey, good morning. Let's go over today's trade plan. So in the overnight session, the buy side has been dominant, and at this point, the S&P is set to open near the all-time high at the 74.75 to 76 quarter zone. So we know that the buy side is in control. The problem is that the market has already moved from 66 quarter in the overnight session into the initial resistance zone, and although the overnight trend could continue, the upside could be fairly limited over here. So the reward to risk of buying at the all-time high is questionable, and that's why it makes it a riskier trade. Now, in order for the market to put in a sustained breakout beyond 76 quarter, we do have to see broad market strength and sustained upside momentum. In the event that the market tries to break out beyond 76 quarter, but we're not seeing that sustained upside momentum, then it could just be a marginal high followed by a move back down into the recent range. And that's why, despite the buy side being in control and dominant, initiating a new long up here has questionable reward to risk, and that's why it is a higher risk trade. Now, on the downside, we have pre-market support at 66.75 to 68.75. We have the previous VPOC at 69, and in the event that the market pulls back towards the previous VPOC or towards yesterday's high, and then in real time we are continuing to see bullish signals, then perhaps there could be an opportunity to trade on the long side, looking for a move back up towards initial resistance and possibly a new all-time high. But if you're entering long near the all-time high, then you have to make sure that it is a momentum-based trade and the momentum is in your favor, the tick is holding above zero, printing some decent values, because that's really what you need in order to get a sustained breakout. And then in the event that we do get a successful breakout, keep in mind that beyond 76 quarter, the market would be printing fresh all-time highs and there is no hard resistance. But given the recent ranges, the market could tag 80 quarter to 82 quarter and then perhaps start balancing again. And then on the downside, below pre-market support, we have initial support at 60.75 to 62.75, which marks the bottom of this recent 4-day range, as well as the breakout area. So that is the conservative area of support. But if the overnight bullishness is going to remain intact, then you don't want to see a very deep retracement. You don't want to see the market breaking pre-market support. But in the event that it does, initial support is still valid and it's still a key spot where buyers can be active. So again, heading into the open, the buy side is dominant, but the market is set to open near a key inflection point. We have the FOMC meeting starting today. The FOMC announcement is due tomorrow. So when you look at the entire picture, even though the market could continue and make a new all-time high right from here, the reward to risk is questionable. And in that case, given that it's a summer market, relatively light volume, you're better off just staying out and waiting for the market to provide you a high quality and high reward to risk setup. So those are the main ideas heading into the open. Let's see if the buy side can maintain the short-term control and the control that we've seen in the overnight session, and we'll take it from there.